Does stock market reflects the economy? Why does government takes measures when there is a huge fall in stock market? Right. So these are the questions you are going to see that get the answers today. So if you're someone who gets confused when government announces measures, saying that stock market is falling by a huge value, huge thing. So is there any correlation between the stock market and does it reflect the economy? This is what we are going to see. If you're interested, please share this video with your friends so that they also know why stock market and why it's related with this economy. Hi, hello, this is Ganesan, your millionaire coach and author of the book Money Leaks. And you can see the at the back of my video that the back picture behind my back, you can see the so many ups and downs, and it reflects. It started with zero, and it is now reaching close to 40,000. It crossed 40,000 by now, and that is the stock market value from zero to 40,000 in the last close to 40 years. So that is a growth we have seen. Basically, there is a correlation between stock market and economy, and people think, even I was thinking when I just started, like why the government is taking measure when market is falling by huge value. For example, if market is correcting by 5% or 10% for due to the and correct due to some reason because of company is not working, and immediately government takes a measure, and then stock market cheers up the government measures, and by that we know the stock market rally is happening, and investors cheer. But only the few set of investors out of the whole lot of people across India invest in the stock market, and it is mostly the foreign investors and people outside India. They make money till now, but now slowly people are getting into the stock market. So I just want to make it clear why government is taking measures when there is a fall. But basically, what is stock market? It is nothing but say your for example, Maruti has just entered the stock market during 2003, and during that time it was just a stock, and valuation is measured by the auditors, and values arrived, say for example, 1,000 rupees, and SEBI will audit the report and then will decide whether this value is right or any changes needs to be done in stock market. I mean, any done in the price of the stock. Once it sees all the report and finalizes this is the correct this report is okay to get listed, and then it is called IPO, and then within a span of 1 week or 10 days the stock get listed in the stock market. So recently IRCTC, the site website which we book trains, got listed in stock market, and it has given, do you guess how much returns it has returned just in a single day? If you're subscribed to the IPO, you would have got 126% returns. I think it's just got it listed at around 300 or something, and it ended up around 600 700 value. So this is the amount of return in one day if you're investing in IPO. So this is one day just like in one day match, it just goes ups and downs. And there are stocks which got listed at negative value or it went down. For example, Reliance Power in 2007 2008, so much hype was given that this stock is going to be a rock star because the market was it was IPOs launched when the value was going on, stock market was going on like anything. At that time, this stock got listed, and do you know what happened? People lost money. Initially, it was, I think, 5 to 10% of the money got lost. I mean, stock price was say around 250, and during the listing day, it resulted in -5% or -10%. This is what can happen when you are investing in an IPO. Okay, now the stock is listed, and on the day one, the value is finalized. And from day two, it's called secondary market. People can go and buy. If you are not investing, if you are missed investing during an IPO, you can choose a stock and find the stock in the second day and invest your money. So this is what the stock market. So why the IRCTC coming into the stock market? For example, because either they want to increase the number of servers, they are serving across India, and maybe they need a capital to serve people for better efficiency, for better progress in the way IRCT is performing, or for better operation purpose. So this money, what they are mopping up, you are paying something for the IRCTC share, and that share, that like that, people across India would have purchase the IRCTC share, and that value, IRCTC as a company, they will utilize it for so many things like operations efficiency, and if there is any debt, they will pay for it. IRCTC doesn't have any debt. So these are the reasons why companies get listed in stock exchange, and it is being regulated by SEBI, and they are called watchdogs because they make sure there is no mistake in something happening, any mistakes happening in the particular stock. And and every quarter from now on, IRCTC needs to furnish the details like what are the sales and what is the profit, and what is the projection for the next quarter, and based on this, the stock value may increase or come down, because that's how people make money. If the values keep on increasing, the stock value will keep on increasing. And if there is any negative news, that's when the drop happens. Just look at the chart behind me. There are so many downs, which indicates that there is maybe a global slowdown, maybe the monsoon is not good, and there may be n number of reasons for a stock to come down. This is when you can also start choosing invest in that stock and become part of the owner. Shall we look at the example? One best example is like Tata Motors. It has huge debt, like Jaguar. They bought Jaguar Land Rover from UK, and they are managing the company. And due to global slowdown and the loss of Tata Motors shares, domestic share, they lost Tata Motors domestic shares, and because of that, the stock there are huge debt which got accumulated in the company. And because of that, the and adding pain is there is a huge economic slowdown. Auto stocks is down like anything, and because of this, the Tata Motors shares that fell down from more than 300 rupees to less than around 130. At that time, people are saying like you shouldn't buy the stock. There may be the bottom is not yet defined. It may go down a little, and government has put on a measure like they are passing on a corporate tax, and this added a fuel for growth. And immediately after a while, Tata's sons, the managed trustee of Tata Motors, what they said is they are infusing a capital of say around 8,000 crores, I think 6,000 crores, I think. So this is like promoters are infusing a stock infusing a capital in their company, means there is a huge conviction with the promoters, and they are infusing their own money. So this is one thing which is a positive sign. On single day, one single day within in the last 2 weeks, in that single day, the stock rose more than 18%. From 130, it has moved up to 173 now. I think today it was trading around 170, 175. So this is how the stock value keeps moving ups and downs. So you can buy when there is a huge down, and you should be take a calculative measure like should I buy that stock? Is there any negative things in that stock? And then, for example, Tata Motors is backed by Tata Sons, and you should calculate is there any a better stock compared to this, or can I make money? So this is how you should analyze, and you should choose the stock. And so this is with respect to one stock, and across auto sector there was a huge slowdown. And this is when government sat together and they finalized, like Nirmala Sitharaman has told that they are reducing the corporate tax, and manufacturing companies can start a new company, and they can the tax rates will be from 15%. So this is one measure which boosted the stock market. And what has happened? And again, because of this, Tata Motors has infused the money with that company. And all these are positive signs. And across the auto sectors, if you see, there has been a huge relief, because there was a huge pileup of inventories, and they can tax has been reduced, so their interest, that everything reflects. So whatever government has taken a measure, that has reflected in the it will reflect in the companies across the industry, not only in auto, nor it can be in all other sectors related to manufacturing, right? So this one measure government has taken just because stock market is falling down, and across the company started voicing out like auto sector is at a very critical stage, the government needs intervention. So this is when government steps in, because stock market is not only for the sake of investors who are putting down their money, it reflects the economy, the organized economy. So demonetization was taken with a single thought that all the unorganized sector needs to come into organized sector, right? So this organized sector is nothing but the people who are coming under the tax regulations, and out of that, few companies get listed in stock market and they are more organized because they need to represent their taxation things and every quarter results, so that they need to be transparent. So Infosys, for example, has went down just because there is a ethical issue which has been reported in SEBI and US regulators, and outside auditors are good, taking care of the audit of the company. So that is one thing which is happening. So so everything is properly regulated with respect to stock market. This is what I want to say. And when it comes to economy, if the sector is down, people will take measure. If for example, because of uh, US and China trade war, the markets across were going down, and because the GDP will come down across the world, the GDPs will come down, and there will be a huge loss of trade volume. So all these have brought down the stock market across the world. And one single tweet by Donald Trump, the president of US, said that we are in talks with China, and that has given a boost to the economy. I mean, that has given a boost to the economy because GDP fall down has been temporarily stopped and the talks were started, and this reflected in the stock market. And what will happen if all the positive news are coming up, and at any point of time there has to be a correction? For example, if the stock actual stock value is say around 50 rupees, and because of all the euphoria, like the premium of the stock can go up to 300, 400 also. From 50 rupees the stock value can go up to 400 rupees, and this gap, this has to be filled up, which means that I believe in IRCTC. I paid 126% premium and I bought a share on day two, right? So, but after a quarter, if the results are down and if the number of people traveling in the train is coming down and the launches is getting delayed, and there is a huge debt because of which the debt is piling up. If these are the conditions, the 126% premium will start coming down. People will start selling shares, whatever they had bought, because they are sitting in profit, or they want to come out of the stock which is not performing well. So actually, if the stock is not, if the company is not performing, it will reflect in the stock price, and if the companies are not performing, it will reflect in the economy. Both are almost one and the same. There are certain companies like in down south, there is a company called Kevin Care which doesn't get listed, and one of my friends is running a successful company, bootstrapped. It's a startup, and it is also like they're not going to get listed because it's a well, they doesn't need external money. If these are the conditions, company doesn't need to get listed in the stock market. But if the pain will be reflected and people will voice out. For example, telecom companies, Airtel, Jio, and Vodafone Idea, all these are suffering with huge debts, and they are again they will go back to the government and will say that we are not able to run the companies because again there is a sale of spectrum is going to happen and they need to pay the huge sum again. So they want a relief, saying that already we are suffering with thousands and thousands crores of money because of huge debt, and Jio has come in and they are disrupted the telecom sector on the whole, and all these are adding to the woes. So what can be done? So they go back to the government and ask for a relief. Can we have a better timeline, or can we give a relief measure like a waiver of fees, spectrum fees for a certain period of time, so that they become profitable? So this is how stock market reflects economy. Just because the company is not performing, the stock is not going to perform in stock market, and uh, economy on the whole is will come down. So stock market is not gambling. So this is a one point agenda for this video. Like if you still think that stock market is gambling, it's not. So you need to believe that stock market reflects economy. If the stock is not performing, it means that underlying point or underlying thing is that something is going wrong in the way the economy is performing. If the GDP is going down, if the earnings are not going reports earning reports are not good, automatically it will reflect in the stock market. Only when the company is keeping up pace with the earnings, that will reflect in the stock value particularly. And again, if the company, if there's only one of the company is performing and other second company is not doing good, only the first company will keep rising, the stock value will keep rising. Not every stock in the stock market is going to do good, and not every stock is going to fall down, right? So it reflects, again, it boils down to each company has its own ups and downs. They need to tide over, they need to come over the challenges. And across the sector, across the industry, if there is a problem, government will step in, they will take a measure so that the industry gets benefited. And if industry is getting benefited, automatically it comes down to the end user like us. So it's not the investors I'm talking about, it's the end user. If the consumer industry, for example, the monsoon is not good, and the farmers are not going to get any benefit out of the monsoon this season, then government will step in to provide any relief measures so that uh, the consumer industry, the FMCG, fast moving consumer good industry, those stocks, those companies also get some relief. Only when the farmers are having the cash, they will start using it. And all these fast moving consumer good companies will start performing, meaning they will start selling goods, or else they will fall down. And farmers are not going to do good, and these are also going to good, not doing FMCG companies also not going to do good. So ultimately government will step in. And last but not the least, a couple of days back, reality sector was given a boost of around more than 20,000 crores, just 25,000 crores, just because this reality sector is one sector which has gone down, or it's not performing, just because of uh, RERA regulations. And just because of that, the projects which has been started across North India, across India, mostly in metro cities and tier 2 cities, the projects are not getting finished because of money crunch and so many issues, NBFC crisis. And all these are piled up the problems for real estate sector. And government just stepped in and said that with some certain criterias, if you're satisfying, then we will provide a relief measure. This is one part of it. And they are also planning some relief measure for uh, people, so that they go and buy these reality inventories, because there are a huge pile up of inventories, but people are also not there. So government is taking measures step by step, so that they are taking steps so that economy is getting revived. So all these again comes down to that stock market reflects the economy, and stock market improves, your your wealth is also going to get created. So stock market is should be part of your portfolio, and invest only part of the money where you don't need for the next 3 to 5 years, so that it is there, it is growing, and it creates a wealth. Don't look at stock market as creating a money making avenue. Look at stock market for a long point of time, say more than 3 to 5 years, so that you create wealth. Just look at the picture again at the back, see from where it started and where it is now. It's at around 40,000 points. So there may be a bull and bear market. Don't worry about that. Choose the best stock, and then do the fundamental analysis, and then stick with the stock for more than 5 years. Right. That's it for now. If you find this video is helpful, and if you find that your friend is going to invest in stock market, just share this video with your friend and let them get cleared his doubts. And I have an opportunity opportunity, like I have created a closed Facebook closed group, a private group, where I'll be sharing nitty-gritties about stock market, like what I have shared today, in depth about stock market and other wealth creating ideas. So that is where you are going to get much more bigger benefits. So if you are interested, just click the below button and then join the group. There will be 3 questions which will be asked, and just answer these 3 questions. Very simple questions. Don't worry, it's not like biggest thing like stock market. It's very simple 3 questions. And if you are answering it, and then you will be approved to join the group. And we are going to start a interesting webinars and other things in a short while in this month. And if you're interested, join it, and please invite your friend, so that he also let him also get benefit of creating wealth in stock market, right? So anything good, you can share it. So that's what we learned from our childhood. So thanks for watching, and please share this video with your friends, so let them also uh, make the money put make the money invest in stock market and create wealth for themselves and for the generations to come in their family. Thank you.